Thanks for joining David, Kevin, and myself for the market update for the month of June. June was also a challenging month for all of us. The Canadian market was off about 9%. The US market was down 8.39%. And the international market was off 8.77%. So overall, another challenging and difficult month for the month of June. I am going to put up a slide here and talk about a couple of points because, as always, I always like to have some positiveness along with some of this difficult time. If you take a look at the chart that I just put up here, going back to 1950, there's been 23 years where the US stock market posted negative returns in the first half of the year. 2022's first half was the third worst of the S&P 500 since 1950. Interestingly, the other 2 years that were worse saw strong positive performance and returns in the second half of those years. The average second half return was a positive return of 2.1%, and nearly 55% of the second halves were positive after a negative first half.
What do we expect to see in the market in the second half of 2022?
I think generally speaking, we should expect for some slower economic growth in the second half, Kevin. Obviously, the story of 2022 so far has been inflation first and foremost. It's costing everyone more to fill up a tank of gas, trips to the grocery store are more expensive, and also interest rates have been going up, so the cost of servicing debt has also risen here in 2022. Those forces combined just means that the North American consumer probably has a little bit less extra money at the end of every month to spend on discretionary things that they may want but may not necessarily need. And obviously the consumer is the backbone of the economy, and therefore also performance of markets too are heavily reliant on the health of the consumer. And the consumer sentiment has deteriorated a little bit so far in the first half of 2022, and probably growth is just going to be a little slower in the second half too. From an economic standpoint as well, unemployment rate has been very low. Job openings are pretty much record highs right now. So what we may see is that those job openings start to wane a little bit. Maybe companies are a little bit more conservative and cautious with their spending, their capital spending, and maybe start to pare back a little bit in that regard. So we may see unemployment numbers go from very low currently and move upwards a little bit in the second half. And then not so much a forecast, but a comment. China, obviously, their zero COVID policy has been troublesome for the global economy. Shutting down major manufacturing hubs in China has not helped supply chains, has not helped the inflation story. So not so much a forecast, but we're hoping that China's pandemic management may change a little bit here in the second half. And even though they're having COVID cases, hopefully they won't be shutting down major cities, and that should help the global economy heal a little bit. But definitely our forecast for the second half is just slower economic growth compared to the first half. Are there any positives we can look forward to, Kevin?
There are, and keeping with your comments about slower economic growth, bad news in the form of slower economic growth could be good news for bond markets and equity markets. With slower economic growth, we might see the central banks start to slow down their interest rate hikes, or possibly even contemplate an interest rate cut if the economy grows too slowly, which would be great for the bond market and could possibly offer some stability to the equity market as well.
Mm-hmm. Obviously, we recognize that 2022 so far, the first half of 2022 has been very challenging for investors. And in conversations with clients, myself, Kevin, and Harry, we recognize that people do have concerns. People are fearful right now. Obviously, performance hasn't been great in the first half. But as Harry said, some of those worst first half performances in the last 50 years, or rather since 1950, the last 70 years, actually had the best, or very strong second half performance. So again, we're not going to try and ever time the markets. We don't recommend making wholesale changes at this time. Oftentimes, when markets are as volatile as they have been in the first half, it's best to typically stand pat and not make any major changes to your asset allocation. Again, Kevin, we always plan for these periods of poor performance when we do design people's financial plans. We use modest rates of return or conservative rates of return when we're doing our projections. So when we go through a tough quarter or a tough first half like we have so far here in 2022, it's not going to ruin your financial plan. It's not going to stop you from realizing your goals. We do recognize that we're going to have a bounce back at some point in time. You just have to be patient. And then those average rates of return start to look attractive again. And they do allow you to meet all of your financial objectives, so long as you're not making any rash decisions, so long as you're sticking to your financial plan in terms of your spending and all that other stuff that we talk about when we do our financial planning for you. But as always, if you have any questions, don't hesitate to reach out to myself, Harry, or Kevin.
Thank you.